To discuss the issue, I am now joined by Max Keiser. He's the host of RT's Keiser Report. He also started buying Bitcoin when it was just, wow, $3 in value. And my other guest, Dr. Jack Rasmus. He's a professor of political economy at St. Mary's College in California. He's also author of the new book, Central Bankers at the End of Their Ropes. OK, gentlemen. Nice to have you both on, and feel free to debate between yourselves. You know, no grandstanding, though, I would beg of you both. First, I'll come to you, Jack. Bitcoin, its future. Does it have one? Is this a speculative bubble, or is it the currency of the future?
Well, it's not going to be the currency of the future because the central banks will start issuing their own digital currencies before it threatens the money supply. But it is definitely a commodity speculative bubble. Bitcoins and all the cryptos are a commodity play, much like gold. In fact, they're sucking a lot of money capital investment out of the gold market. And it is a speculative play, and I think it's going to go higher. It could double. I think it's about 18,000 a coin now. It could go even higher. And we see the proliferation of other altcoins. There are over 1,000 altcoins offered out there right now. But it is a speculative bubble, and the key question is, will it pose some sort of danger to the financial asset markets in general? And that's a possibility. I think what we had in 2008 with the combination of subprime mortgage bonds and CDOs may be repeated here in another year or so with Bitcoins or altcoins and exchange-traded funds as we start doing ETFs with these Bitcoins and other currencies. And that could have a major effect on the commodity futures market.
Okay. I'm sorry to interrupt. I just want to bring Max in. Give him a chance to respond to that, Max, because if I believe correctly, you think that the cryptocurrencies and Bitcoin are the kind of the answer to the subprime mortgage crisis that devastated the economy, whereas, you know, Jack's saying that it's actually just going to be another version of it. What do you make of that?
Yeah, Jack makes some good points there. I disagree on some points. As far as Bitcoin being the currency of the future, I think we will see Bitcoin emerge as the currency of the future. The history of Bitcoin, if you will, as it plays out in the public market, it's first as really a messaging app, and this accounts for its explosive growth. This is why we see it expanding so like wildfires, because it's primarily a messaging app. That's what Bitcoin is. It's a technological achievement in messaging. Number two, it's a store of value. Gold was mentioned. It is gold 2.0 in that regard. And number three, once the price gets to a certain critical point, I believe at about $100,000 a coin or so, you'll start to see the volatility level off, and you'll start to see it used more and more as a currency. And at that point, it'll have a sizable percentage representation in the global currency market. It's already bigger than many of the reserves of countries around the world. I think it's number 20 on the total market cap of reserves around the world. And third, or finally, in terms of central banks coming out with their own competitor, central banks, by definition, cannot come out with a competitor to Bitcoin because it would be centralized. Everything that the central banks do, as Jack's book, from what I gather, the title, I'm paraphrasing, I think the title is Kill the Central Bankers. That would be my title for it. They can't compete with something like Bitcoin by creating their own centralized version of it. That's anathema to everything that Bitcoin does. So that's not going to work. That's never going to happen on a competitive basis.
Jack, I want to come back to you. I mean, your book is Central Bankers at the End of Their Ropes. That suggests you think that their time has come to an end. Isn't that because of the beauty, as fans would say, of Bitcoin? It is decentralized. It is something that people have invested in because they see it as perhaps a safer option than having their money stolen by the banks in a bail-in.
Well, you know, you got to look at the drivers of Bitcoin, and there's fundamental drivers, there's enabling drivers or causes, and there's precipitating causes of it. The fundamental causes are the technology, the blockchain, which is being adapted and used by a number of companies and a number of industries. But it's also the massive central bank liquidity injections in the last 20, 30 years, which I estimate somewhere between 20 and $25 trillion of fiat money and liquidity injected into the economy. That's fueling all kind of financial asset bubbles. We see the stock markets, particularly in India, Japan, and maybe in the U.S., reaching bubble territory now. The junk bond markets have already begun to collapse. We see other markets, frothing. We're in the late credit cycle globally here. And in a late credit cycle, you see a lot of these financial speculative plays going on. And Bitcoin's one of them. So it's technology and it's the massive increase in liquidity that's driving this. And people are wrong to think that these are only early adopters here, techies and nerds and so forth, investing, thinking they got a philosophy of an alternative currency. Over half of the trades now are in Japan. Japan has legitimized this whole thing, and half of the traders and buyers are retail buyers, and most of those are buying on margin. That's a bubble. That's a bubble, and bubbles will always collapse. There's no history in the world of bubbles being created and not collapsing. And as far as the central bank is concerned, it doesn't have to centralize it. All it has to do is start creating digital currencies, and what you got is a flood of supply of digital currencies. And one of the reasons you got a bubble is that certain people like Nakamoto and the Winklevosses and others are controlling the supply, allowing it to rise. Whenever you try to capture a market, you control the supply. Well, what will happen will be the central banks will issue digital currencies and they'll bust the supply and the prices will come down.
Max,
that's how they're going to play. They're not going to play it
Let's let me come to Max, because you've talked a lot about bubbles there and about the threat coming from governments with their own digital currencies. Max, a lot of people talk about the tulip mania. I mean, I know you're a great supporter of Bitcoin, but is there a danger that this could take a very steep plunge? And if it does, can it bounce back or will it bust altogether?
Well, first of all, the idea of governments coming up with a supply of their own cryptocurrencies that are centrally managed would actually force more money into Bitcoin because it would just be a repeat of the same flawed fiat money systems that they have currently. Just by having a fiat crypto by a government, it's like having the US dollar or yen or any other fiat currency. That's why there's money flowing into crypto, because crypto is like gold in that it is a store of value and there's a limited supply, and this is actually going to drive the price higher. Number two, you can't have blockchain without Bitcoin and have the same security that you have with Bitcoin. Having a blockchain without a token like Bitcoin is just a ledger. It's just a database. It's relatively useless. So that's not a competitor either. What gives Bitcoin its attraction is that it's completely secured by the distributed network of all the nodes that verify all the transactions. And this is it cannot be replicated really in the same way that it has been and gained the universal acceptance that it already has. And it's becoming the de facto go-to cryptocurrency of the globe. So I don't see any competition coming at this point. And as far as the point of margin buying, this is not really driving the action in Bitcoin. What's driving the action in Bitcoin is people who are looking for a store of value and escaping the US dollar, which is the tulip bulb of our era. The stock market and bond market are the tulip bulbs of our era. The tulip bulb of 1630 was driven by highly leveraged transactions. That's what gave us tulip bulb mania of 1630. Bitcoin is the opposite of that. This is the beneficiary of the highly leveraged speculative bubbles in the dollar, the stock market, and the bond market. That's why we're seeing this rush into Bitcoin. Is it going to be volatile? Yes, it will be. But that's not a reason not to get your money out of fiat. Only keep money in the US dollar that you want to lose.
How can you call a financial asset that goes from less than 1,000 to 18,000 not a bubble, Max? Of course it's a bubble. It's a financial asset.
How do you go from Facebook having...
It's a substitute for gold speculation. It's a bubble. And it's not secure. It's not secure either. I mean, you can get
false.
into digital
Jack,
keys.
It's false. What you're saying is false.
Hackers will break digital keys all the time. They will break digital keys all the time.
No, that has not happened. It hasn't happened once.
A major offer will be broken into, and it'll lose the security appeal of it, and people will jump out of that particular altcoin into another maybe, or maybe out altogether.
Max, I want to ask you about...
The problem is that it is a speculative play.
I want to ask you about regulations, Max.
It is centered in Asia.
I want to ask you about regulation because it looks like it's coming. We've had the French finance minister, the German finance minister.
Around. It's global. It was in Eastern Europe. Then it's in Asia. It was in China. Now it's Japan. It's global, depending on where they get the cheapest energy source and the greatest hashing power. That's irrelevant. It's an irrelevant point.
Max, I'm just trying to ask you about regulation, if I may.
It's in Japan. 50% of all the trades are in Japan right now.
At the moment,
and
Jack, you're not listening.
It's being driven by retail, and it's being driven by margin. Margin buying in retail buyers in Japan are driving this market. It's not the techie nerds in the U.S. And whenever you get extreme margin buying and retail
that's a false
investors,
statement.
You're going to get a lot of volatility, and it's going to collapse. No, it's not a fault. It's a fact. Most of this trade is located in Japan, and the Japan Financial Authority has legitimized this, and the CBE and CBOE and CME are legitimizing this, and the hedge funds are jumping into this, and you're going to get ETFs, and an ETF is one of the things that's driving the stock market right now, and passive index investing, and when you get ETFs and Bitcoins with the volatility, you're going to get a psychological effect of ETFs collapsing in Bitcoin, and it could spill over to the stock market and bond market ETFs. That's a contagion channel, and that's a big risk.
Jack, the geographic center of Bitcoin trading has changed every 6 months, going back 5 or 6 years, depending on various market conditions. At the moment, there's a high concentration in Japan. It was previously in China. Before that, it was in Eastern Europe. Right, and it'll move again to possibly Russia.
No, China,
as they get into this. As central banks.
China's
Jack, listen, Jack. Jack. Hello, Jack. Central banks will be buying Bitcoin in 2018 as a strategic reserve. So you're going to have China, you're going to have Japan, you're going to have the United States. The Federal Reserve Bank will be buying Bitcoin to go with their gold in 2018 as this currency and this store of value starts to push out fiat money. As fiat money is increasingly perceived as worthless because it's been no cap on its creation whatsoever. As you point out in your book about central banks, they're the malevolent actor in all of this. Bitcoin is the solution to them. Bitcoin is where we're heading, away from the fiat money and fractional reserve banking. And as far as the security goes, it's never been hacked.
You got $600 billion.
Any hack that's ever happened on the Bitcoin.
You got $600 billion in Bitcoin. And you got $80 trillion in fiat currency and $600 billion in Bitcoin. It's not going to replace it soon.
That's right.
It will become a robust financial asset commodity speculating market. It will be that, but it won't be a currency.
Well,
it's
Jack,
a commodity play.
In
It's
2018,
like gold. It's a financial speculative play.
There's no reason why it can't be a currency, and it'll be worth $5 trillion in the next 2 or 3 years, and these other currencies will diminish in value. You already have people contemplating moving in their entire country's economic model over to Bitcoin. It's playing an enormous role in places like Venezuela and in various countries in Africa that have been cut out of the modern banking system, who are leapfrogging now into the 21st century. They're going purely Bitcoin now at this point. And we're seeing in Zimbabwe and Venezuela.
Well, they're going Bitcoin because their currencies are very volatile. I mean, the euro, the dollar, the pound are not as volatile.
Max, can I just pop in with a question at this point? You're having a very good conversation. I want to talk about the fact that you obviously see a very positive future for Bitcoin. Are the banks going to try and derail it or change it into something that they can control? Because we've heard the French and German finance ministers calling for a debate at the G20 summit for regulation of Bitcoin. Are they going to try and make it something they can handle?
They can try, but they'll fail because there's no way to stop it. It's unstoppable. There's nothing they can do to stop the adoption, growth, acceptance of Bitcoin as a store of value, as a currency, and as a unit of account. That's the history.
Gentlemen, I'm afraid I'm going to have to wrap things up now because we're about to lose the connection to you. Otherwise, I'll be more than happy to keep going for another hour or so with this. Real pleasure speaking to you both. Max Keiser, host of the Keiser Report, and Dr. Jack Rasmus, Professor of Political Economy at St. Mary's College in California. Really fascinating conversation. Enjoyed listening to that. Thanks, guys.